No, I think if you look at the A shares performance this year, it has actually outperformed the H shares quite significantly, largely because the A shares, the makeup of the A shares index is actually quite different from that of the H shares, where it's dominated by a lot of the high-tech stocks, the consumer discretionary high-tech stocks, which are basically under a lot of scrutiny. Whereas on the A shares, you have a lot more breadth, a lot more depth, and therefore you can actually afford to actually diversify a lot more into some of the exporters as well, where the scrutiny is actually not quite there, not at the kind of levels that we are looking at with regards to the H shares. And that's why I think on that front, the A shares are a lot better. And also, don't forget the valuations. The valuations on China is cheap, right? I mean, if you look at the 12 months forward PE divided by growth, China is basically trading at a 30% discount to global equities, and it's trading at a 35% discount to US equities. And the growth rates are still pretty attractive, because I think if you look at the second quarter results for a lot of these companies, even where the tech giants are concerned, their revenue has actually been growing at in excess of about 30%. So despite the ongoing regulatory scrutiny, the top line numbers have not been adversely affected. And that's why we do think that China actually represents pretty good value for a lot of investors.
And on that value front, talk to me a little bit about an energy play, specifically a green energy play. What with the China power crunch story ongoing? Part of that, strand of that, is that China does have emission targets to meet. It is transitioning, like other countries in the world, just at a slightly different pace towards a greener economy as we head towards COP26. So where do the opportunities lie there?
I mean, we like the electric vehicles, for example, the EV sector, and we think that there is a tremendous amount of opportunities there. But the share prices have actually rallied dramatically from the sell-off in February and March that we had this year. So I think for that one, we probably need to look for a better entry point. But there are other companies that you can actually look into, like for example, fintech, 5G, that are also to a certain extent related to the green energy movement. We do like the cloud operators and the data centers as well, because I think these were also sold off in the aftermath of the regulatory tightening on the technology front. But again, these are not really at the forefront of the scrutiny itself. So there are a lot of actually very interesting pockets of undervalued stocks in the Chinese A-share markets that I think will be very, very attractive for a lot of investors.
What about the classic consumption theme, Kelvin? How are you putting the data together to ascertain the trend here? Because it seems a bit like, I don't know, month on month, it seems a little bit unpredictable.
Yeah. Well, I think if you look at the numbers that came out this morning, and I think you guys were talking about it earlier, on the manufacturing front, we are not in the doubt that there will be a slowdown, right? Firstly, you have this power crunch or energy crunch in the last couple of weeks that will really affect your production. And on top of that, you have the US and the European consumers increasingly shifting the spending from durables to services, right, as the economies open up. So if that happens, it also means a lower level of demand for goods that China will have to export to the US and Europe. And we're seeing that not just in China, but across Asia as well. I think in Singapore, we saw the non-oil exports numbers actually trending down. And again, it's not surprising. It's just a reflection of things going back to normal, which, in other words, if you take a step back, is actually a pretty good thing to have, actually, right? I mean, given the impact that COVID-19 has had. In China, we do expect the same thing as well. So we do expect the recovery in service spending to come gradually, and that's as a result of the leveling off of the sporadic outbreaks in COVID-19 that we had in certain provinces in China. And as you know, the Chinese authorities have adopted a zero-tolerance policy. So whenever you have sporadic breakouts, they will basically enforce a complete lockdown, and that in turn is actually not positive for consumption.